Hey, what's up guys? It's James here from Beaxy, here to show you a strategy called triangular arbitrage. So with triangular arbitrage, you're going to use three separate trading pairs, and the idea is that you're going to take advantage of some pricing inefficiencies between three different currencies. In this case, BTC USDC, USDC Euro, and BTC Euro. With triangular arbitrage, a couple things to keep in mind. It only works during very specific windows. Usually the market isn't completely inefficient for very long, so you have to kind of watch to see what currencies are trading at a premium relative to other currencies. It also works better with low transaction costs and automation. A lot of the users that we have doing it are using automated strategies to complete it. In this case, I'm going to show you a manual trading strategy for triangular arbitrage just to show you how the flow would go. So if you notice, we're starting off with the BTC USDC pair. I'm setting a sell limit order to sell all my Bitcoin into USDC. And it looks like I got a partial fill on the first order, but I got to make sure and get all the way into USDC. So I've just got to do another separate limit order here to sell off the rest of my Bitcoin. For those of you unfamiliar with bots as well, sometimes with bots, you're going to have to sell everything into one currency to get started. So just keep that in mind. I mean, I don't have to do it here, but I'm just going to go ahead and do it for that purpose. Sometimes you have to slide your spectrum thing that it gets to 100% again, because the platform needs to recalculate what approximately is 100% of your asset, and also take into account your trading fees and that sort of thing. So sometimes if it's telling you your balance is not enough, just reslide your bar and it'll work. So now I've got all of my Bitcoin for this demonstration into USDC. I'm going to switch to my next pair, which is a pair that we recently listed, which allows you to complete this and also not risk as much completing it using USDC Euro. So this is a relatively riskless trade because it's a stable coin to fiat. Also keep in mind, I'm setting my limit orders at market price because I want this demonstration to go forward, but normally you would try to set more competitive prices for your orders, which would up your chances of actually making a profit on this strategy. So now I've sold all of my USDC into euros. You'll notice euros are worth a little more than dollars. Not to be alarmed. Unfortunately, benefiting from that exchange rate is difficult if you're on the other side of the pond. Now that we've got everything traded into euros, I go to the Bitcoin Euro pair and I'm going to buy Bitcoin with euros. Once I've purchased the Bitcoin with euros, you'll see that we're back into Bitcoin. And theoretically, if you've done triangular arbitrage correctly during the right time window, you'll have more Bitcoin than you started with in this case, because that's the base currency of the triangle. In this case, I'm just a dollar or two short of where I was in the beginning, but again, just to show you the overall strategy here. So that was our triangular arbitrage trading demo. Like I said, it works really well if you have automation involved and if you have low transaction costs, which means that you can take a look at Beaxy Black, for example, or some of the bots that we have on the platform. If you need any more info, head over to info@beaxy.com or hit us up on Twitter @BeaxyExchange. If you want more walkthroughs or tutorials, you can head over to our YouTube channel. Thanks for watching, everyone, and until next time, cheers.